For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
All right, everybody, welcome back to another Saturday Sendout from the Simple Side coming out on Sunday. Today, we're just going to be taking a peek at some of the research stocks that we've sent out and how they've been performing, and then also quickly talk about the Quant macro model. Let's get into all of it right now.
Welcome to the Simple Side. Market beating picks inside. There's no jargon and no time to waste. Join the Simple Side and end up in first place.
All right, guys, like I said, today we're just going to run through a quick review of all the current research that we have out for paying subscribers. And of course, we'll talk about just a few things that we've got going on right now. As always, copy trading for our portfolios is available on Autopilot. Our portfolio views are available on our website, thesimpleside.news. And of course, we have our macro indicators, our research reports, and our monthly picks all available on the website, thesimpleside.news. Again, and you'll find everything there. If you're a paying subscriber and you're looking for the password to access the site, there'll be a prompt to take you there. If you're a free subscriber and you want to join paid and access the site, there's a prompt that should help you to figure that out as well. Okay, all right. Let's talk about a few of the side bets that we have. Of course, we recently came across some stocks that we feel like have pretty solid outperforming potential. Those trades we all sent out, I think, earlier this week, and they're up 1.53% on average. We also started a new service for paying subscribers, which offers looks at deep valued monthly stock picks, which can be found at thesimpleside.news/monthly-picks. Those are currently down around 1% on average. And of course, today for paying subscribers, I've got a quick look into 2 additional stock picks that I think are worth looking into. And of course, one of those will be in the AI realm, and the other one is in the oil realm. Oil, of course, is sitting at 100-ish. I think last time I checked was $98, $99 a barrel. So those oil plays, we should really start to see them pay off here in the future. Regardless, I wanted to make a note of all the things now available to paying subscribers. 3 copyable portfolios on Autopilot, the macro portfolio, the monthly stock picks, the weekly stock picks, and now one-off research reports. So we've got a huge variety of things that are available to subscribers, all of which we hope to maintain an outperforming status. So just be paying attention to all of those. All right, quickly, for anyone who's a paid subscriber, we're going to talk about our current macro views. And then, of course, we'll get into those new stock picks and the current performance stock picks for any current subscribers. Before we get into that, I just want to show you the current portfolio performance for the macro quant portfolio. And if you don't know, this is a portfolio available to subscribers that makes a weekly allocation between TLT, SPY, and GLD. Of course, that's bonds, equities, and gold. We, of course, started this macro portfolio on January 1st of this year, and year to date, we're up around 15% on that portfolio, while the SPY has lagged and is down around, 0.6, 0.5%. So we're seeing pretty solid outperformance with that portfolio. A lot of that, of course, coming from the crazy gold rally that we saw earlier this year. Gold has probably been a 90% weighted holding in the portfolio for a majority of 2026, and we've seen that pay off for us quite well. In the newsletter, I've shared a chart that shows the rating of gold and what it's been every day so far this year. So it's a chart that's showing the price of gold, and then the color of the line is based on the indication that we have for gold in our quant tracking portfolio. And you'll see we started off the year, gold was around 400, or excuse me, not gold specifically, but GLD was around 400. It sat in strong buy territory, switched briefly into a buy territory, and then went back into our strong buy territory. And the stock ran all the way from 400 to nearly 500, took a large drop back down to around 420, and of course has slowly accelerated since then. We're now sitting at around 460 on the year. Gold basically that entire time sitting between the strong buy and buy territory, hitting I think a sell one time in that period, but overall has been a main driving force of the portfolio. And just recently, gold has entered it back into that strong buy territory, even following the recent dip that we've seen in gold over the past week or so. Of course, the economy is crazy right now with wars happening, but it seems like gold is the right place to be right now. Our overall macro view is a buy at this point in time. We've got a 0.50 rating. Of course, the rating scale goes from -1 up to +1. And so this is a moderate buy indication. It's by no means a strong buy signal. But all three of the different, I guess, assets that we're looking at, bonds, equities, and gold, are sitting in buy or strong buy buckets right now, which is the first time that's happened in a long time. Now, in general, what that means is that the market is likely overreacting to the current situation in Iran, at least in the long term. Of course, our model isn't predicting what's going to happen tomorrow, but it's a longer term predictor. I think typically we're expecting to see things change within the first month or the next month. And so, it's looking like we're oversold, at least for the month. Now, remember that our quant portfolio is based entirely off of data and has no kind of sentiment analysis in it. And so what it's just showing is that based on the current data that we have access to, it seems like the economy is still in a solid position, and we shouldn't be too terribly worried about what's happening with people selling off due to the war. Of course, only time will tell if the war will escalate or relax, but at this moment, it looks like the data shows a safe, at least safe based on valuation, safe economy. So we should be all okay there. If you are invested in any of my portfolios, I would just remain calm at this point. I don't think there's any reason for a freak out moment. The data seems to be supporting stronger market dynamics, and the sell-off in oil is not a market crashing event. Yes, it's a problem, but definitely not something that's going to explode the stock market. Of course, full-scale war could start to change things quite a bit, but I think that's not something that we're directly expecting. Something that I do want to highlight is that my cash holdings have decreased recently by around 20% due to all the recent bets that I have sent out and made, a lot of those on oil. Which means we're sitting at around 30% cash holdings. And even with that number, I feel pretty dang safe given the current market volatility. So I think we're just fine with those, especially since a lot of those bets are kind of in oil, and one is sort of, I guess you could say, almost anti-oil. And so we should be seeing fine payoffs across the board and no major issues. All right, we're going to quickly now shift into everything that's for paid subscribers. So if you're a free subscriber and you think what we're doing is somewhat interesting and you want to check it out, today is probably the day to either take a free trial, join the paid, or anything of that nature. We've got four big bets outstanding. 2 oil companies, an undervalued stock pick, and then a crypto-focused stock pick. And really, I think we're going to be seeing solid outperformance between the 4 of these names on average over the next few months. One of our bets, the expected payoff date really starts within the next, call it 11 days. I think the 26th is the day that we're going to be expecting things to kind of change for that company. So we should be really looking out for that. But all of that, of course, available to paid subscribers. Paid subscribers also have access to our weekly picks, there are 4 weekly picks currently for this upcoming week. Last week we had none. Our current returns on that are 87%, while the S&P 500 has returned 23% over the same period of time. So great outperformance there. We're happy with that and how it looks. And this is a short podcast for this week, but as always, I'll be seeing you next weekend. Happy hunting, everybody.